given where credit unions are and that we've got a healthy movement, but there's some maybe signals of needing to focus on remediation, what do you see as countermeasures that credit unions can take uh, to not only stop but improve their mortgage, their commercial loans, the rest of their portfolio for their members?
Raj,
Sure.
why don't you
I can,
start?
yeah, sure. So Lisa, so there are two sides to this equation, right? So for the credit union to be healthy, you have the growth side and then you have the expense side. So of course, on the growth side, whatever has happened or transpired over the last several years, you'll see a lot of credit unions, and because of the interest rate environment, the way that it's gone up so fast and not coming down fast enough, you'll see some lopsided balance sheets. Right, so a lot of credit unions are dealing with that, and of course, with the pandemic and post-pandemic influence, the lending has come down. I mean, people, a lot of members and people do not have as much liquidity as they had during the pandemic when you had the government stimulus. So the deposits are drying up. People are not taking loans as much as they did in the past. It's slower, right? So they're not refinancing their mortgages anymore. Why would they when they're at a low interest rate? So there are several economic factors that are driving member behaviors on the lending side and on the deposit side. Having said that, from a growth standpoint, credit unions have to start thinking about more creative ways to raise deposits, to get new memberships, and grow in lending portfolios. What that would entail is, come up with creative products to generate deposits, right? If you look at banking products, majority of them are all pretty much commodities. So what differentiates one credit union or one bank from another? You have to come up with creative products that have some value adds for the members. So that's how you generate deposits and members. And on the lending side, we may have to reposition some of the lending products with better feature functionality rates, and maybe venture into areas that credit unions normally do not. Maybe small business lending could be one, right? You have get creative with some lending products. Like we did at Connecta, we came up with a mortgage product called Meet Me in the Middle, which is a pretty creative lending product considering the high interest rates and people not trying to refinance or buy a new property because they're stuck in a low rate mortgage. So you can get creative. And at Connecta, we also launched a new deposit product with a whole slew of benefits for the members, like roadside assistance, cell phone insurance, you name it. If you've got about 15 or 20 different functions or features that you can avail, a teledoc, without any down payment for a doctor visit, all of that if you have a checking account. So you have to get creative. That's on the growth side. And on the expense side, of course, cost cutting. And then we truly need to focus on automation and efficiencies across all workflows, across all departments, and across all back office. So that's on the expense side. So you got to tackle both ends and become efficient and flip the balance sheet around.
Yeah, and
Oh, go ahead, Sue.
I was just going to say, and the only thing I would add, because he covered it so well, is we have to remember we're credit unions. And when we put the products and services together, understand the market. So creativity can come from social impact. It can come from investing in the communities. It can come in ways that would further our mission and differentiate us within the market. So when we talk about, the balance sheet and the size of the balance sheet, we're also juggling how do we make a difference on the bottom line? And so Raj covered the basics. I actually went into a lot of detail. Thanks for the best practices. I think that's fabulous. But I would just suggest to everyone, do it around mission. Do it around what would differentiate you within the market, because literally people will talk. That will add to member growth, and that will add to the grassroots growth.
Yeah,
I
great.
think all of that is great advice. I want to zero in on one thing, Raj, you said, um, and I think it's really important. And I've heard this, that many credit unions are looking at partnerships or the ecosystem and
Mhm.
really only considering fintech. When you went through Connectus Creative Offers, I heard a lot of local and more not just fintech partnerships. Could you speak a little bit to that?
Yeah, so I would call it's both, right? You're leveraging fintech partnerships to deliver for your memberships and to deliver for your local communities, right? So
Well,
you're catering to your membership base, your seg base, your local communities, but you're using a fintech to do it, or a myriad of fintechs to do it.
yes, well said. And one thing that I like, and it sounds like the Connecta brand has done a good job of that. It's meeting the member where they are,
Certainly.
um, and having those
Yeah.
products and services.